Hello, this is Paul Mampilly for the Profits Unlimited YouTube channel, and I'm making this video to give you an update about the stock market. The stock market has been down about between 8 and 10% over the last 2 days, and it's, I'm certain, going to drive a lot of panic among investors, especially new investors that have come into the stock market over the last 1 or 2 years, because we really haven't seen a period like it. Equally, however, going back and looking at the months of November, December, and January, we also saw a market that was unusual in the sense that week after week, the stock market just kept going up and kept going up and kept going up. And usually in that environment, from my experience, it tends to draw what I would call easy money investors, people that are in the stock market for a quick pop. They're just really there. They think that the stock market can go up a lot very fast, and they're really in it to speculate very quickly on it. And so these investors can be very easily displaced. And I believe that has now happened and is now happening. From the perspective of the mechanics of the market, when I look at the moves on Monday in particular, it looks like somebody is doing a very big trade where they're selling stocks to buy bonds in all likelihood. And if you saw my most recent video on interest rates rising, that makes sense because the interest rate on the 10-year U.S. Treasury government bond is somewhere in the range of 3%, and that acts as a threshold for many people looking to buy U.S. Treasury government bonds and swapping or selling other assets that are considered riskier and going into the U.S. Treasury bond, which is considered to be safe. And in my previous video, I mentioned 4 different types of assets, including corporate bonds, low and no growth dividend paying stocks, safe haven assets like gold, and digital assets like Bitcoin. And so I believe that this is one reason why we've seen this very extreme move in stocks on Monday. Now, in terms of what you should do from here, I believe that now is a good time to start buying. If there have been stocks on your list that you have been looking to get into, now is a good time to start buying. I've told you in previous videos that you should never buy your stock all in one shot, so you should follow that advice that I've given before, which is break your buying up into 3 or 4 or 5 slugs, meaning that if you've got 1,000 shares, buy 200 at a time. Even if you're buying small number of shares, like 100 shares, break it up into 2 or 3 orders, and that way you get a chance at many different prices. The other thing I would say is that you should have at least 3 to 5 stocks in your portfolio, and if you can, up to 10 stocks, and that's for 2 reasons. First, it gives you many opportunities to make money, and second is that if you just pick 1 or 2 stocks, and if you're wrong about 1 or both of them, now you're going to lose a lot of money in them. So you want to spread your bets around, give yourself as many chances to win as possible. Finally, I'll also say that when I look at the overall environment for stocks, I would say that the environment is really positive. I saw a note from FactSet Research, which is a well-known research company, saying that in their tally of estimates that they collect from analysts on Wall Street, they have the highest number of estimates and the highest number in terms of the percentage growth rate for the current quarter, and they've been collecting these estimates for 16 years. So that's a really positive thing for the market, because ultimately stocks are underpinned by sales and earnings, and so this is a very positive thing. Second, when I go and look at critical macro indicators, meaning things that matter for the pricing of all assets, interest rates, as I mentioned earlier, 3% is still a fairly low number for the 10-year bond. Yes, it will make some people swap out of certain assets and want to buy it. However, in terms of the economy for, say, buying houses or buying large equipment or making major purchases, overall interest rates are very low. And so that's good for the economy, which in turn is also then good for the stock market. Inflation is another thing that people track, and inflation is still quite low. So that's another positive. I'll also say that President Trump's tax reform package is going to make taxes lower for any number of businesses, particularly small and medium-sized businesses, so that's a positive. It's also going to increase the paychecks of most people by hundreds, if not thousands of dollars, so that's another positive, because that's spending that's going to feed into companies, and that's also the sales and the earnings and profits of the companies in the stock market. So these are all positives that tell you that this extreme move down is going to pass sooner rather than later. And the stocks that you choose to buy now and in the coming week and the coming weeks will be up sooner rather than later as well. So I'm still positive on the market. I still believe that we're in a bull market and stocks are going to continue to go up. And of course, I favor the stocks that I focus on the most, which are the mega trends like Internet of Things, precision medicine, new energy, the coming of the millennial generation, and financial technology or fintech. If you're interested in those, you should subscribe to my Profits Unlimited newsletter. So that's my update on what's going on with the stock market. Please support this channel by giving this video a thumbs up. Please subscribe to this channel and share it with your friends and family. For the Profits Unlimited YouTube channel, this is Paul Mampilly.